welcome to Thursday's episode of Straight Talk. Thanks so much for joining me. We're coming at you a little bit later than normal because we had some breaking news this morning from OSFI, the Office of the Superintendent of Financial Institutions for Canada. That's a mouthful. But basically what they're now suggesting are a series of potential measures that they've released a public consultation for today to potentially look at implementing into the future. Now, as we've known with OSFI in the past, anytime they've done a public consultation and put that much effort into coming up with proposals, they usually end up panning out, and most of what they end up suggesting becomes law. So let's review a couple of the things that they've requested or potentially put forward for change. Number one is they're looking at potentially doing a absolutely new stress test, which is going to be dependent on the term of your mortgage. So we could see a situation where a 1 or 2 year mortgage may have a different stress test than a 3, 4, or 5 year mortgage. We may also see that go back to a situation where the fixed and variable have different stress tests, but all the details remain to be seen, and we don't really know what that's going to look like. The other one is that they may require borrowers to have a more strict sort of debt to service ratio for the total debt servicing and the gross debt servicing. Right now, we use a very standardized total debt servicing and gross debt servicing ratio to qualify you for a mortgage. That may actually be decreased, or they may make it a situation where lenders are not able to provide exceptions, which is something we currently do. If you have a very strong file, often we can get an exception, and that may actually go away if this whole situation comes into fruition. The third thing they're looking at doing is potentially taking a different approach to what the bank's liquidity or overall debt tolerance can be on a file. So it may be a situation, for example, where they take your entire debt, including the mortgage, and they might divide it by your annual income, and also the bank's total mortgage debt on their portfolios, and rebalancing how much of that sort of ratio they're allowed to keep on their books in a specific fashion. So they may have to increase or decrease liquidity in certain areas, or tighten the way they hold those mortgages on their portfolios and change how much debt they're allowed to contain in one category, for example. So all of that sort of remains to be seen. We're going to see what actually ends up being implemented. My guess is it's going to be sometime around the summer if all of this goes through. Now, what are the consequences of potentially over-regulating in a market that's already heavily regulated? We have a lot of things that could end up happening. So a couple of things to really take note of here. In Canada, this is a crazy statistics, but 99.86%, so about 99% of Canadians are currently up to date with their mortgage payments, even with all the hardship that we've faced. Canadians take a lot of ownership and a lot of pride in having a mortgage, and when they do have a mortgage, they make sure that those mortgage payments are generally always paid, even in times of financial difficulty. Now, with these regulations, if we're going to be tightening further and further and further with all these potential new measures, we're likely going to be pushing borrowers into the alternative lending channels, which are not federally regulated. So they may go into the credit unions more often, or they may go into alternative B lending or alternate lending channels where the measures may be slightly more relaxed, but it actually potentially poses more risk for the borrower, in the sense that if they go and get an approval with a more relaxed guideline or a lower stress test with a non-federally regulated lender, and then we hit an economic situation in 2023 or beyond where we have a downturn in the economy for whatever reason, another pandemic, another variant, another war, something happens, the risk of default for that borrower could actually be higher because they've gone through a much more lax process of getting approved to begin with. So now OSFI may actually be setting themselves up for a little bit of trouble, knowing that they could potentially put more borrowers at risk of default by going to the alternative lending channels. So that's number one. The other thing you have to ask yourself is this even necessary? I mean, look at everything that we've already had implemented. We had 7 rate hikes from March to December of last year, and that was a 400% or 400 basis point increase to the rates that we were currently living with. And so, 7 rate hikes haven't even had a chance to implement themselves into the market. Add to that, we have a foreign buyers tax. We have a potential recession in 2023. We have an anti-flipping tax. We have new regulations coming for real estate taxes. We have more tightening for capital liquidity requirements for banks coming up this year. So there's already a lot being thrown at the real estate market. So one really has to ask, is this even necessary to continuously make it more and more difficult, especially for that first-time home buyer to get into the market? First-time home buyers typically do everything they've been told to do, save, get a good job. Every time they get close to that goalpost, it gets moved another 10 yards behind. And this is really all that's going to be happening now. Another consequence is for existing homeowners who are counting on their equity for retirement or for future financial planning may be at a loss, because this could push prices further down and create a situation where we have more and more erosion of existing equity in Canada. And, we've already had a 22% price drop since essentially March of last year until now in the real estate market. We've seen a decrease in home prices about 22% in the last 9 months, and that is already relatively unprecedented for such a short period of time. And this could just drive that down even further. So there's a lot to be said for all of this. One of the other consequences is that if people are pushed out of the purchase market and they go to the alternative channels and they can't get a mortgage there either, or they just choose not to go to the alternative channels and continue renting, what's going to happen is it's going to push rental prices even higher than they currently are. We have very, very limited rental stock left in Canada, especially in cities like Vancouver and BC, and that's why rental prices are so astronomically high, and this is only going to make them even higher. So I'd really like your feedback. I'd love to hear what you think of OSFI's potential changes. I don't know if you've watched or if you've heard the news, but maybe take a look at it. Let me know what you think, and we can talk about it in another video. Send me a comment or comment below, shoot me a DM, whatever it is that you prefer, and let's chat about it. Maybe we can do an Ask Me Anything next week, and we can talk about these guidelines in more detail. And as always, I'm always here to answer any of your questions one-on-one, so feel free to get in touch. Have a great rest of your day.